Welcome back, traders, and hope you had an amazing post-Fed session yesterday. The U.S. Central Bank cut interest rates by quarter percentage point, a widely expected decision, but traders took profits immediately after the decision, with euro-dollar and gold retreating from fresh highs moderately, while even Bitcoin lost some ground. Well, if you're wondering why did this happen, well, first of all, the central bank signaled a steady shift towards a more accommodative monetary policy. It cut interest rates for the first time since last November, but that was widely expected. And policymakers didn't vote for a sharper 50 basis point rate cut besides the Trump-selected new board member, Stephen Miran. So there was no huge surprise, and probably that was a chance for some traders to take profits. Lisa Cook also participated in the in policy decision despite her legal battle against the Trump administration. She's still defending her position, so probably she will face more pressure in the coming sessions, but let's see how things will evolve. In the meantime, let's switch to the charts and see what the technical picture suggests. And looking first at euro-dollar, we can see that euro-dollar hit a new almost 4-year high around 1.1917 yesterday, but then following the Fed decision, it closed negative quite near the 1.18 level. Today it's facing some stability around this level, around 1.18. And the question here is, will bullish pressures resume in the coming sessions? Well, looking at the technical signals over here, the indicators are still within the positive territory. Of course, the stochastic oscillator is currently pointing lower. It's about to reverse to the downside, but the RSI is comfortably above 50. The simple moving averages are still pointing upwards. The 20-day moving average is above the 50-day moving average. So all these suggest that the short-term risk is still skewed to the upside, and it's quite important to note that the price has escaped this downward trajectory following a lower low around 1.1390. The price reversed lower and even breached this resistance trend line, violating this negative pattern. So that suggests that there's still buying interest in the market, and if we surpass the 1.19 territory, I expect a continuation towards the 1.20 number over here, and then higher than that there's another key resistance trend line near 1.2120. That could also act as strong barrier to upside movements. Now looking to the downside, well, no concerns could emerge if the price pulls lower. If it crosses below 1.18, then I expect some stability somewhere between 1.1680 and 1.1730. That could still keep the market in an upward trajectory. However, if we break below 1.1590, well, that could cause some concerns. That could send some stronger bearish signals, likely driving the price towards the previous lows and closer to this descending line over here, which coincides with the 200-day moving average. So that area around 1.30 and 1.14 could also be in focus in case of a steeper decline. Now looking at gold, as we mentioned before, gold also retreated following the Fed rate announcement. Technically, it found resistance around this ascending line over here. That line became a strong resistance territory after the price touched it for the third time. Now, the key question is, could this pullback gain more legs? Well, technically, we're still in overbought. We still face overbought conditions. The RSI and the stochastic oscillators are flattening in the overbought zone. The stochastics is already red. It's already prepared to shift to the downside, and the MACD seems to be slowing down over here close to its previous high. So I wouldn't rule out a pullback, in which case the 3610 and 3630 zone may attract attention. The price is has already tested that area previously earlier in the day. So if we close below it, that could we could see a bearish continuation towards the 3570 zone, and where the 20-day moving average is placed. And then below that, the 3500 mark could attract special attention, because that's where the previous high from April is almost located. So failure to rebound here could shift the outlook back to neutral, and therefore disappoint some traders, likely causing some extra selling towards the 3430 level, or even closer to this key support trend line near 3350. And finally, looking at Bitcoin over here, Bitcoin faced a slight pullback yesterday, maintaining resistance near the 117,000 level. We can see that the price is currently pushing this level again, is trying to close above it. But let's see if if it will prove successful. According to the technical indicators down here, we haven't confirmed overbought conditions yet, but we are very close to that territory. Particularly the RSI is close to its 70 overbought level. The stochastic oscillator is already above 80, so that suggests some caution, or in other words, suggests that upside pressures may face some limits. If the 170,000 mark proves strong, if it holds, then the price may return to the downside to test the 50-day moving average at 113,345, break of which could drive us towards that support trend line over here, taken from the lows of April, near it's currently seen near 111,530. The 110,000 mark could also be of psychological importance, so I would keep a close eye on that before targeting the previous low near 107,500. And if that proves easy to break, well, bearish actions could stretch even towards the 200-day moving average at 103,175. Now, in the event of a bullish breakout, which I would rule out in the short term, well, the next pivot point could emerge near the 123,000 sailing. That's where the price faced rejection back in July and also back in August, despite hitting a new all-time high higher at 124,480. So that could be a key obstacle against bullish continuation, and perhaps this previous broken support trend line near 126,000, that could also be a key challenge for the market. So that's everything I wanted to share with you guys. We have more central bank meetings ahead, so keep a close eye on fundamental news. Of course, we'll be back next week on Monday for more technical updates. So thank you for watching, and see you next time. Bye bye for now.